Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Well, we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves, what happened today, and what does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's available to you there. The channel's L.A. Little. You can catch it there anytime, anywhere, any device you're choosing. As far as these markets, interesting day. I wrote a little article this morning. I said, a pullback. Are you kidding? I mean, after up, are you serious that we're going to get a pullback? Well, no, we're not. A little bit. Yeah, we were down 0.2%. This market finds buyers each and every turn, folks. I mean, it doesn't matter what's the scenario. You just keep finding new money to come in and replace whatever money wants to leave when it finally wants to leave. Dow was the biggest hit. McDonald's, there was a few of them getting hit pretty hard. Same-store sales pretty bad there. And especially telecom was getting hit hard. I don't know what the story was there. I didn't see. But other than that, we were down big today. We were down about 20, I think it was about 27 points. I have to do the math here real quick. What is that, 25 points. Yeah, actually from the close, yeah, almost 27 points on the S&Ps. So a big day down. Everywhere else, green, right? Oil bounces, the UNL bounces, the bonds push up almost another full point. That was after a 1.5 yesterday, which are huge moves. Silver, gold up 24 bucks. It was big moves to the upside everywhere today, with the exception of the dollar. And the dollar actually cut its losses fairly largely compared to where it was. So one of those days where, you know, they just can't keep this thing down. And when we go look at the markets and we look at the indexes, you're going to see what we're talking about. Now, last night, if you remember, I was talking about there being 2 ranges. And I was saying that, you know, for the most part, you kind of had this top range here, and then you had one up underneath it, right? And that if we got the break of that, we'd probably see another one. And I don't know where I got my calculation, because I was looking back at it, what I said last night. And for some reason, I was thinking that the S&Ps could trade down to 2020. I guess I was thinking we'd get the full move again, right? I don't know what I was looking at, so it looks like I misspoke there, because when I do those range trades, I should have said that it would trade to about 2035 or so, which is about where it went to. And I did look at it right on the composite and the NDX, and we'll get to those in a minute. But anyway, the gist here is that what did we do? Well, we came down, we broke this low, right? This one here, got up underneath it, traded down to the extension of the range, flipped around, and came all the way back up and got back inside the range. So you test fell to the downside. And not only do you test fell, if you look at the volumes, you actually test fell on the volumes as well. That tells me this thing's going to flip around, which it already has, right? Done a hammer and go right back up and test the highs. And so I would be very surprised if we don't head right back up and try to test and break out the highs. So you get a range trade breakout, trade to the bottom of the range, flip around, you come all back in the same day. That's a bullish market. The Dow basically the same thing, looks almost exactly the same. I'm not even going to go through the details. It also tried to break down. In this case, it was trying to break the 21st bar, has less volume, gets up underneath it, right? So if I just draw across the line here, you can see it test under it, gets underneath it, right? Can't hold it, flips around, has less volume, going back the other way. So that's the Dow, that's the S&P. And then we go over to the NASDAQ and the NDX. Now on the NASDAQ, I'd said this thing would try to trade down to 46.70. Well, we got to 46.74. And the range here was this range, if you remember. and we expected it to trade down about an equidistant, and it got almost to it. And what does it do? It does the same thing that the Dow does. Tries to break down, gets under it, back over it. This thing's going to go try to break out the top again. In this case, it's not the top high. It's still trying to break over and hold the breakdown bar, which is 47.82. So you go under it. You actually have a little bit more volume, yet you come back up and close inside that range after pushing almost the full range on the downside. NDX actually pushes the full range. I said last night 42.16 is where it would try to go if it broke 42.16. It gets within about a buck, a little bit less than a buck of that. So it basically trades the range down, flips around, comes back. Volume a little bit heavier as well, but still back up inside the range. And the standout today was the Russell. The Russell up, let me see, 1.79%. Now the Russell couldn't even break that range, right, like the other two did. What the Russell did was, remember we were talking about the Russell had two ranges, top side and bottom side, and the Russell went down to test the bottom, couldn't quite get to it, flipped around, come back, and now this thing's going to try to break out tomorrow. And remember, the Russell is the one that hasn't been able to do anything, and part of I think what we saw today, and honestly I have not gone through 2,000 stocks in the Russell to try to figure out the groupings in them. Maybe that's an exercise for another day, but you can tell that this Russell is going to try to break this swing point high finally. 1183.85. We closed today 1186. This thing's going to try to break it out on a weekly basis, and if so, that only leaves the highs. If you look at your calendar, we're about 2.5, 3 weeks away from the end of the year. Russell looks like it's going to try to make a run for the top, and that coincides with everything you're seeing everywhere else. These stocks still look to go higher. That's the indexes. If you look at the sectors, really no difference there. I'll highlight 2 or 3 of these, but if you go over there and you look at, let's look at the strongest ones first. IBB goes up, trying to make new highs. Right, the SOX that came off yesterday, back up the other way, holds. What was another? Oh, XLF has been a strong one. And this, the XLF actually is doing this despite bad news today in 2 fronts, and actually the market as well. Hilsenroth, who's really the mouthpiece for the Fed, the guy's got to get inside information because he's almost always right, which makes him godlike in terms of Fed knowledge. He says the Fed next week, you know, they got their meeting next week, they're going to remove that considerable period of time phrase. The fact that he can roll that out today, that these markets were already being hammered by overseas weakness coming into the day, that was the gap down today. He says that, and the markets rally. Rose-colored glasses, folks. Everything looks pink when you're looking through rose-colored glasses. Not only that, the Feds said that the banks are going to have to ante up more capital for surcharges, 4 to 5%. What do the banks do? They rally. Now, maybe it's a one-day, I don't care, maybe we roll this back tomorrow, but it doesn't look that way to me. So, we'll see. Let me see. I was glancing down the list. XLV also at new highs. If I look at the weaker ones, they're actually positive as of tonight. IYT tries to break that big bar on the way down, gets under it, back over it, holds it. That's positive. XLE, which has been in the doghouse, what does it do? A 2-bar reversal. And remember, we talked about an ABCD structure down last night. It's under, back, over, and I shouldn't call it a 2-bar. It's an under, over. But you've actually got the same thing happening here on the weekly. Now, let me do the volumes right quick. 270, we've got 75 coming in, so that's about, let's round it at 37. 5 times, it's going to be almost the same. 175. Oh no, it's 270. It's not going to be anywhere near that amount. You know, so we're doing 74. That's, yeah, we're going to do 200 at best. So you're under, back over, less volume. That's going to be a test failure on the weekly, assuming that it holds over that price and you have an under over. After setting up the ABCD structure, you're back inside this range as well. So energy, one of the weaker ones, actually positive as well. So that's actually the weak ones. Overseas markets, I just want to highlight a couple of those real quick. China, now China got slammed last night. Let me pull up the 8 shares here. So these are the large cap 8 shares that trade on the Hong Kong exchange. You can see the huge price pressure to the downside, down 4.5%. But folks, it comes after about a 20, I don't know, it looks like about 20-25% on the way up. So, 20 something. So, you come back 4.5 off of 20 plus, who cares? The volume is not excessive. You actually had almost as much volume at the top, so it's not even volume off the top. I suspect this thing's going to flip around and probably do some sort of consolidation for a while up here and build up enough steam to go higher. So overseas, that's the way that looks. If I look at the European markets, which also got hit, coming back into this big bar is the German market. Looks to me like it potentially will successfully retest and regenerate higher. Doing the same thing here, coming in on this swing point high for the CACs. So those don't look that bad either, even though they sold off. So in a nutshell, it's kind of hard to be negative, which has kind of been hard for 2 months now. And this market still looks as if it's going to try to go higher. If we look at the dollar sold off pretty hard, but then it, like everything else, reversed, flipped back, went the other way. Oil also got a little bounce today, but the oil services stocks really were the ones that were showing it today. Let's look at the OIH again. You can see percentage move here, 2.5, well, 2.25. This is a long way to go still, but a decent reversal. We'll see. It's an under over just like the other ones. If we look at the bonds made a big run again today and then sold off. So they spiked up into this bar, 124.13. They got to 123.97. Not as much volume. These are going to settle back in again, come back in, build some more, strength, and try to go at it again. Junk bonds we saw broke down last night. They extended today. This is an ugly scene here. That's an ABCD down that's just about complete, if not complete. So it looks like at least that's going to settle down for now. Just like we saw with the XLE, if this actually pushes back up, it's not going to have the volume on the weekly. That would say that this thing's going to stabilize for now too. And so as you can see, everywhere you look, you can see the picture being positive even though you had a negative day today. And you need a negative day every now and then just to figure out, is it for real? And, that's what it looks like to me. So in synopsis here, yeah, it looks like we're going to try to go higher. I don't see this thing stopping yet. Okay, had a viewer question. Let's take that, actually a couple. So let me pop over. This one has to do with the Chinese market. And the question is with the Chinese market doing what it's doing, what do some of these individual stocks look like? One of them is the Industrial and Commercial Bank of China Limited, IDCBY. Now, I don't have a lot of volume on it because this is trading on the OTC, so you don't have quite as much volume. I'd like to see the underlying chart that's actually on the Chinese exchange, but I don't have access to that, so I'm looking at this. But even here, you can get a pretty good feel. And what you see is something like we just saw, which is a huge run higher, a big spike back down. But look at the volumes at the top and the volumes at the lows as we come back. I suspect this is just coming back to do a retest and regenerate and attempt to go higher again. So I don't see this as a huge negative at this point. It looks okay. So if I look at the weekly, it's the same sort of scenario. This still looks pretty positive to me. That high is 1385. It hasn't updated today because I just put it in tonight. That close was at 1365. So it's trading right about here. So it's doing a retest, regenerate off this bar. Okay? And it's a trip back within 6 bars. Well, actually, let me take this back. Let me see here for a second. This is, oh yeah, this is last week. So I don't have this week's bar yet on the weekly. And that's because I just updated this tonight or put it into the database. Yeah, so it's doing a retest, regen's coming back, going to test it, and I think that looks fine. Now, longer term, just like with the Chinese market, right, we haven't broken out yet. Now, I think that's true, and I didn't check, so let me pull it back up again. HSCE, I believe it is. Yeah, it hasn't broken out yet. So from that perspective, it looks the same. So where's a good entry point was the question. Ideally, you'd like to get it down around 13. It looks like the support zone that's here is ideal, about 13.20 to 25. If I look at it over here, that also is a perfect spot. So I would think if you can get it around 13.20, 25, that'd be great. That would be a decent entry. Now, I don't know if you'll get that much. You got support here at 13.50 as a low. So anywhere from 50 back to 20 is where I'd start trying to average in on it. And then the next question has to do with ABCD patterns. And the question here really is, what's the theory behind these guys? You know, right? What makes an ABCD pattern? How does it work? Not so much just how does it work, why does it work was really the question. So let me spend a little time. I'll use this as the spotlight feature tonight. This morning I actually was, you know, I don't do this on a regular basis with the members, but we have a teach and trade room where I try to, you know, teach principles, the neoclassical principles, and show people how this stuff works and why it works and how they can use it. And they can use it on any time frame. So a lot of times during the day, I will go in here and just call out the trades. So this morning I was calling out, you know, we could mark these up, but I'll just call them out as we go here. So this morning, as we get this spike down off these first 2 bars, right, we put a low in. If you count 6 bars, right, that becomes a swing point low. Well, we came down to test it right here, and we actually broke it and stayed under it. That's a break of a swing point low. So what did it do? Immediately it does a retest and regenerate. In other words, it comes back in, it's trying to regenerate lower. Just like we see on the daily charts, right? It's trying to do that here. As it does that, of course, it finally tests the top here, fails, and then the very next bar, it gets over it. That tells you at that point that at worst, you're probably in a range trade and that you probably should try to buy the next retrace. And as a matter of fact, that is what we did. We bought into this retrace and then we got to move up. And I was telling them at the time it was an ABCD, potentially an ABCD forming right on this pullback. Sure enough, that is the way it formed. That ABCD measured up to about there, and then you started getting ABCDs all day long that were not only completing, but completing nicely all the way up all day long, right? Just one after another, and you got another one in effect that we'll probably try to complete in the morning. So what are they? What's the theory behind them? Well, the theory is that the market ebbs and flows, right? It doesn't go in a single line. And the reason it ebbs and flows is that there's something called anchored resistance. And I've talked about this many times in books and so forth. But essentially, if you look at this, and you know, this is an intraday chart, so you're not going to see it, but there is anchored resistance right at this price point. And you can see as it moves up to it, it's already extended. This is a 5-minute bar. It's already extended by the time it gets there. That was the earlier high, so that's a swing point high sitting there. It comes up, tries to test, And what happens? Well, some of the people that bought it down here or wherever, they want to book those gains, right? And that leads to a little selling pressure. Well, the selling pressure is what sets up the retrace. And then eventually, if the trend is going to continue, so the trend in that it's trying to go back up, right? And we already know the overall trend is up. So there's a higher probability that this thing is going to try to go back up again. As it gets to this swing point high and breaks it, right, then it gets a spurt. And you can see that spurt, then it settles, and then it eventually goes again. Now, let's go back to the ABCD structure on top of what we were just talking about. So what is the ABCD structure? It's a price point where you make a move from some low up to some high. Usually that high ends up being, right, this high here ends up being where there's anchored resistance. It almost always ends up that way. It doesn't have to be a swing point high, but usually you get anchored resistance up there somewhere. So you move up, right, back down, right, it retraces off of it. And actually, let me get the other one so I can make straight lines. My hand's not that talented with the free flow. Moves back down, right, and then eventually when it breaks this area, which happens to be the anchored resistance zone, then it gets the push up. Okay, so what are these ABCD things, right? Well, the A is whatever that low is, right? So your A's down here. Your B is just happens to be wherever that high ends up being. The C is wherever it retraces to. The D is typically a one-to-one extension off the distance between here and the distance between here and here. So if you measure that distance and then you project it from this low, that's about where this thing's going to try to get to. Right? And every time it does one of these, it sets up another one potentially, right? And it just keeps doing that over and over like we just showed. The theory is that, right? That you're going to run up to an anchored zone and then you're going to see some profit taking. And then you're going to, if that trend's going to continue, you're going to pop back over it, which is going to give it the push, right? Because think about what's happening. If I'm bearish on this market today and it gaps down big, right? Then it gets a bump up, comes down, and it actually makes a new low, right? Now it's coming back up to here and it's failing. Can't get over the swing point high. What does that mean? Well, that's where I want to take my short and put my stops right up here somewhere. I don't want to risk much, and what I'm doing, I'm shooting for a lower low down here. If I'm in that mindset, that's how I'm going to trade it. As soon as it breaks over this, guess what? All those stops get triggered, however many there are, and the longer this goes sideways, right, or drifts down, the more these build up usually, and that spike up is the break of that area where those stops end up being longs. They have to come in and cover, which juices it, right? And again, just like I was just talking about, matter of fact, I didn't notice it, but looky here. Look at the distance of this consolidation. Look at the distance of this one. Look at the push you get off of that one. Look at the push you get off of this one. The longer consolidation, the bigger the push, right? And you got a long consolidation here. After a push here, I suspect you're going to get a push tomorrow to fill this out. That's the ABCD structure. That's how it works. That's kind of the theory behind it, at least my interpretation of why it works as it does. And hopefully that helps you to see that. The only twist I have on ABCD structures is that I typically measure them on a not on just an arithmetic move. In other words, I don't look at the price point per se. I look at the distance, and I've got a log chart. And so I look at the distance on a log chart and I project that same distance up. So in other words, I'm looking at a percentage gain versus an arithmetic gain. Most of the time that's about the same, especially on smaller moves. But if you get large moves in small stocks where the price point difference is huge, then that gain can be magnified. And so the gain or the loss, and that's why. What I just showed you here Works exactly the same in reverse. For example, if I was doing an ABCD structure here, you see that one? There's an ABCD structure to the downside right there. So it works exactly the same. Principle's exactly the same. You come down to some area. What is this area? Look at it. It's exactly what I just talked about. Here you've got anchored support. You come down to anchored support. That's where the buyers are going to buy, right? They're going to put their stops right up underneath it. What happens when this thing actually breaks down? Boom! Fast move down. What is that? That's those stops triggering. You see how that works? That gives you the extension to create the ABCD structure. Even on a bullish day, you actually had a small ABCD structure intraday on a 5-minute chart that fulfilled its mission. Folks, thanks for joining me. Have yourself a great night. Tell a friend, tell two. Matter of fact, send them a link. Invite them to come take a look at what we do. I'm LA. This is and it was your daily NeoTA wrap. Have yourself a great night. Take care of yourself, and I'll see you later. Good night, folks.